Another spectacular. Oh, shush, I'm ready to go. I'm excited. I've been waiting all week for this.
We got to redo that intro, I think.
Yeah.
You think?
I think so.
You don't suppose
we like the old
didn't
intro.
sound like there was a problem there, did it?
No.
Frank is here. Paul is not. It's a special day in the neighborhood. Dora
It's a
joins us.
special day in the neighborhood.
How are you doing?
Here I am. I'm well, thank you. How are you?
Couldn't be much better. Look at that. Sun is shining. Birds are singing.
Perfect. It feels like spring.
Spring market is almost here, sort of, kind of.
It is almost here.
Beginning to grow a little.
It is. It is. So I think with the fact that we've had some of the warmest temperatures we've had in January, it does feel like the spring market is coming. Certainly in the last 10 days, a lot of activity in the real estate market. We're seeing an uptick in sales. We're seeing even back to some multiple offers on homes, which is exciting for sellers. But it's a good time to buy and sell.
So what caused this now, this little change?
What caused the little change? I think it's just buyers have become acclimatized to the interest rates, to everything else. And I think, we're seeing a correction in our market. And with every correction, there's opportunity. And as a seller, you can focus on the fact that for the first time in years, it seems that buyers have the advantage. And they do. There's more choice. There is time to take a look. But as a seller, despite all of the price adjustments, despite the fact that the interest rates went up 7 times last year, the equity that you have gained in your home in the last 3 years is extraordinary. It's historical. So opportunity both for buyers and sellers right now.
That true, Frank? People getting used to the rates now?
I think people are getting used to the rates, but people still can't stomach the fact that their mortgage is coming up for renewal, and they're coming out of a 2.69, 2.89, 3.19, and now having to look at, if you're speaking with your bank, you're likely in the 5s, and some banks are offering 6% mortgages. So that's the part that they're having a hard time with, because as much as they built equity, and that's the good news, the fact that 5 years ago their house may have been worth 400 and today it's worth 700, they've got 300,000, and I can preach that all I want, and it makes them feel good because now they've got this added equity in their home.
Still need the cash flow, though.
But they still need the monthly cash flow. And now, we're having conversations about, well, then let's re-amortize it for 25, 30 years, and so that we can keep your payments the same, especially if you want to, if what you think is safe in your eyes, which is just taking a fix, because you've got the bank employees calling you and telling you to renew now. Because, and I can tell you a story, and I'll share an email with you after, Steve, so that you can read it. But a listener that listened, and I said, listen, if they're gonna make you an offer, make sure it takes effect on your maturity date and not today. And one of our listeners heard that, and her and her husband went to the bank after they'd received a call to sign the paperwork, and they couldn't find anywhere on the paperwork where it said it was going to take effect on the maturity, which was in April. It was all going to take effect today. And she goes, well, now I want nothing to do with this. Let me cancel it. Well, somehow their mortgage disappeared from their system as well. So, again, these are some of the complications that happened. But, I'm happy that the listener was able to at least defend herself and say, we're not signing this. Why would we give up our 2.89 today? And they offered 6.15 or something like that for a 3-year, which I think is crazy anyway. So, I just think that people are scared of, number one, they're being scared by the bank personnel. So I'll tell you the difference between the bank personnel and the bank economists. The bank economists will tell you recession's coming and interest rates are coming down. The bank personnel call people and scare them with tactics like, you should renew now. You've seen what's happened the last 7 or 8 months with rates going up. They could continue to go up. Let's early renew you now. But that's in the best interest of the bank, not in the customer's best interest, because why would they give up 2.89 for the next 4, 5, 6 months to sign up now when rates are likely going to be lower 5, 6 months from now? So,
that's where we're at, right? People that are renewing now are about 2.89.
2.89 to 3.19 is most of them that I've seen. So again, much favorable rates, and it's tough. And I had a couple of clients yesterday that I said, it's bad luck. Your timing is just bad luck. If your mortgage is maturing in March and April, it's a really tough decision to make, because the forecast does call for fixed rates to come down if we hit this recession, but you don't have the benefit of time. You have to make a decision now. And if the right decision is to take a variable rate mortgage, which might be the right decision, but it comes with a sacrifice. The sacrifice is that Prime rates today is at 6.45. The likelihood is very good that the market is priced in a 0.25% increase on Wednesday, which will bring it to 6.7. And even if you're getting prime minus a half or prime minus one, you're well into the fives and maybe low sixes, and that's what you're signing up for. Instead of maybe getting, some banks that have 4.99 for a 3-year, instead of getting that. But won't you kick yourself if 6 or 8 months from now those interest rates are down into the low 4s and 3s, and you took the 4.99? Now you gotta wait another 2.5 years before you can convert. We're on a
Yeah,
variable.
even if you have to sit on that for 2 years, you're still going to be ahead of it over 5, right?
Well, again, it all depends. And people say, well, prime's going to come down too if we hit a recession. Maybe. But I think Tiff Macklem's made it very clear. And not that we can trust everything that Tiff Macklem says, because again, Tiff Macklem's the one that set Canadians up for failure by taking variables, because he's the one who came out. And when he said it the first time that he said interest rates will remain low for a long time, all right, so what's a long time mean? I mean, he said that in 2020. 2 years is a long time? Well, then he wasn't wrong.
To him, yeah.
Well, then that wasn't wrong, because he didn't start raising rates until the middle of 2022. Where he went wrong is that he said rates will remain low later. He said rates will remain low. We probably won't start increasing rates until 2023.
Yeah.
So that anybody that was buying a house in 2021 or early 2022 was
Yes.
taking a variable based on the fact that rates wouldn't go up until 2023. And they're the ones that kind of made the mistake of taking a variable, because it backfired on all of them.
But I think that contributed to sort of where we saw the halt in the market, is because after the announcement of the first rate increase in March, that's where a lot
market
of
went
buyers,
cold.
yes, the market went cold. And a lot of people who had already purchased were in a position where they had to, in order to convert on the next sale, they had to have their house sold. And the buyers sort of disappeared, and so they were forced to decrease their prices. And that's where we saw sort of this accelerated change in the market in spring of 2022.
Speaking of variable, let's go to beautiful Bridlewood. Say hello to Steve. Hello, Steve. Great name, by the way.
Thank you.
Thank you. It's a whole new world.
Yes, it is. Good. Well, again, I mean, I think
Italian.
mortgage brokers are supposed to be, basically, they have no favorites. Like, as much as, I can tell you that I'll work with 10 or 12 lenders every year. I don't have a favorite. Once I understand what the client's needs are, I try and place them with a lender that will meet their best needs. And it's not always the best rate, but it's more about understanding what the client is looking for. Is this a long-term purchase? Is this a purchase that maybe, 2 or 3 years from now? Is this just a starter purchase that 2 or 3 years from now you might want to upgrade? And if that's the case, then we want to make sure that you've got a portable mortgage with a lender that allows for flexible portability. So, and not every lender does that. They all say they do, but then once you go do it, they put all these restrictions in place that you can't meet. There's some lenders that won't let you port a mortgage unless the closings happen on the same month. So not 30 days, but on the same month. So if you're buying closing on the 31st and you're selling closing on the 2nd, even though it's only 3 days, they don't let you port because it's on a different month. So that's the kind of stuff. And there's a lot of online brokerages out there that promote these awesome rates, but what they don't tell you is about all the restrictions. The other part is, I think, hopefully the broker has been able to sit down with your son and gather all the information, gather all the paperwork ahead of time, so that, like Dora said, we're starting to see some competitive situations again. And if there's competitive situation, you definitely want to know that your son's got a formal pre-approval, where the only thing that's really standing in the way of an approval now is the actual property itself and the purchase price. So, but I don't know, your son, how deep into the pre-approval is he? Okay, good.
Terrific.
Yeah. Yep. Yep, agreed. And again, there's a couple of banks out there that have what's called fixed payments within a variable, so that you'll get today's variable rate, but they won't change the payment. And for some people, the monthly payment is the most important thing. So you might go with a variable that offers you the fixed payments, where if prime were to continue to go up, the payments wouldn't change. So
Within reason, though, right?
within reason, yeah. And I think we're beyond that now. I don't think prime can go up another 4 percentage points now. So that's there. And I agree with you that I would go variable if one of my kids was buying a house today. I would recommend that they go variable, just because I do believe that fixed interest rates are coming down. Just to put it into perspective, from a year ago today, the gap between a 5-year bond and a 5-year fixed rate was 1.4% a year ago. Today it's over 2%. So it just shows you that as much as we've seen inflation on everything else, our food prices, while we've seen inflation on the mortgage market too, not from a standpoint of the rate going up because they're tied to bond markets, but on what, again, just like I think a lot of food companies will tell you, it's these corporations that are increasing their profits by raising prices the way they are. It's not all inflation. There's also greed in there. I think there's greed on the financial institution side right now, where a lot of them, just to give you an example, there's a gap for us in our broker between a lender, a non-bank lender, where we can get 4.69 for a 5-year fixed, and some of the banks are at 5.49 for a 5-year fix. So that's an 80-point gap, and it just shows you. And talking to the lender who's got the 4.69, they're still extremely happy with the profit margin that they're getting on that 4.69. So it just shows you what the banks are making when they're charging clients 5.49. Mm-hmm. Nope. All frills. 2020 prepayment privileges, portability, the works. So, again, it's out there, and your broker should have access to it unless, they don't. Again, some brokers, the only thing that I say about some brokers, they play favorites with some lenders, and they only want to deal with those lenders, and they forget about other lenders that might have better products out there.
So, all right, Steve, we got to move on.
Thank you so much.
Good luck.
Bye-bye.
521-TALK, 521-8255. We'll be right back. Welcome back. Dora, are you ever seeing any first-time home buyers these days? Is there such a thing anymore? It just seems such a rare commodity. I'm waiting for Hinterland, who's who.
Yeah.
The first-time home buyer.
I think a rare commodity, and Frank can speak to this too. I think right now, because there is opportunity in the market, we're seeing a lot of multi-unit owners coming out and buying. So a person who owns a property going to buy an investment property or a townhome, because we've seen such a decline in prices there. First-time home buyers, absolutely, there are some. And with rates, rent rates having gone up as much as they have in the last couple of years, it makes sense to go buy, because at one point, if you're paying more in rent than you would be in your mortgage, despite the interest rates being high, the math doesn't work. It just comes down to your down payment. How are you going to save for a down payment in the environment today with everything, the cost of living being so high? And I think that's where we're seeing sort of this inter-provincial shift, where we're seeing a lot of young people and a lot of first-time home buyers leaving large urban centers and going to smaller cities, which has helped the economy all over Ontario, sort of spreading the wealth. And
but how are first-time home buyers able to put away a down payment if the average rent in Ottawa right now for a two-bedroom is $2,315?
That is a very good question, because if you look at what how home prices have increased in the last 10 years and how the average income has increased in the last 10 years, there doesn't seem to be a correlation. And so I don't know how people are saving other than mom and dad cohabitating with other people, and just reducing spending in any way, shape, or form that they can.
Are you starting to see that now? Are you showing homes to pools of people who have decided, either two couples buying a home together?
Not really.
No.
A lot of multi-generational living.
Yeah.
So mom and dad selling a house and moving into a home with a young couple, where mom and dad will take a certain portion of the house and the young couple will take a certain portion. Certainly seeing a lot more of that in Ottawa, which I don't think was the norm in our market before.
No, it was the norm for Frank, though.
Yes.
We're telling you,
It's
you have
Italian.
two kitchens anyway, so why not put both kitchens to use at the same time? I mean,
Yeah.
Let's go to beautiful downtown Kemptville. Say hello to Chris. Hello, Chris.
Hi, Chris.
Hey there. A couple of questions. Number one, I was curious about land values out in Kemptville. We live currently in Kemptville, but I'm looking at purchasing land, and I have for our son.
Mm-hmm.
And I'm wondering if you could give me some idea what
So land value in Kemptville and values in Kemptville as a general whole, we saw an increase of about 40% in pricing through the pandemic. So as we went to working from home, we went to a hybrid model now, or we continue to be in a hybrid model now where you're going to work 2-3 days a week. There's a lot more attraction to move out into the outskirts. So Almont, Kemptville, everywhere saw a big growth in pricing. It's very, very difficult to give you a price on a piece of land. It will depend on whether it's serviced, whether it's in a subdivision, whether it has, a paved road, not a paved road.
Would have been awesome 10 years ago.
Yeah, dimensions and all sorts of things. So that's a loaded question. If you'd like to call and we can chat about it offline, absolutely, just to get some more details on it. But value is a lot higher than it was a few years ago, though they've come down in recent months.
Perfect. And then the other question for Frank, I'm just wondering about, the banks look at financing land differently than a home?
Absolutely. They don't have an appetite for financing land generally. And in some cases, they'll finance it if you've got, if you're at the start of building the home. So, if you've already started preparations with plans and stuff, they want to know that they're not in it for long term. They want to know that, they're financing the land, but, within 12 months or so, you're going to start building on it so that they'll have a house that goes on it as well, and then they can finance the house as well. For most people, what I'm seeing when it comes to land financing is, especially if it's a parent that's helping, what they're doing is they're using their home equity line of credit to buy the land, because that would be a cheaper way to do it anyway. And putting it on that so that the house is unencumbered, because that's the other part of, if you're going to apply for construction financing to build a home, if the land itself is encumbered with a debt on it, then it makes it that much more difficult to get financing. So it all depends on scenarios. Generally what I'll do is I'll speak, and I've had lots of scenarios where exactly what you're doing, you're looking at buying land to help one of your kids maybe build a house in the future, near future, or later on. And there's equity in your home that we can kind of tap into just to assist with keeping the costs down as much as possible, and also have a better chance of getting an approval with an exit strategy of, obviously, once the house is built, then we can finance that home itself on its own.
Okay, perfect.
Wonderful.
Thank you, Chris.
Thanks
All
for the
right.
call. Bye-bye.
Different lenders better at this than others?
Well, again, most of the major banks really don't like construction financing, and
What if you just want to buy land? What if you just want to buy 50 acres? And
depends on how strong your portfolio is at a bank. So, and it depends. And I would always say that if you're buying in a community, like a small community like Kemptville, I would strongly urge you to potentially talk to a bank that's in that community, because they'll have a better feel for the land value and the fact that you probably got your accounts and everything there. So it strengthens the possibility of you getting a loan specifically for the land. So now that most of them, again, depending on what the land costs, if it's a $30,000 lot, then the bank might just suggest just a personal loan.
Yeah.
But if it's a $250,000 lot, now you're not going to be able to buy it with 5% down or 10% down. Just so you know, the likelihood is that the bank, again, there's exceptions to it. So if a parent went in there and said, I want to buy a piece of land, and they've got a healthy portfolio with that bank, or just a healthy portfolio altogether, the chances are that you might be able to get 80% of the value on a land loan. But realistically, generally speaking, it's anywhere between 50 to 65%. So you've got to have a significant down payment. We get calls from time to time of first-time home buyers who want to start off with a lot and they have 5% down. Well, that 5% down program, or even less than 20%, is not available for land. It has to be a house.
Well, even when you're getting a conventional mortgage, don't they just take in 2 acres as part of?
Well, some lenders are 5, some lenders are 10. But ideally, again, if you're buying a big house on a big farmland, there are restrictions there too. If you've got livestock,
That's right.
most lenders
Different
want
taxes,
nothing
too.
to do with livestock, so they don't want to finance something with livestock. Again, the banks and the lenders, you have to understand, it's all about marketability should something go wrong. They look at a worst case scenario. If they have to take that property back, they want to flip it in a week if they could. They want it listed, shown, offers, and they're out. When it's got livestock and when it's got other unique aspects to it, they don't want to be sitting on it for 60, 90 days waiting for that right buyer who wants that specific scenario.
Well,
So
here I thought they were just here. there to
To help
Profits?
you.
Yeah.
There are some builders though, if you do your homework, there are some builders that will help you purchase a lot. So if you approach them with a vacant property, there are some builders who will purchase a lot as long as you sign a contract with them for the build, and then you have more
But
of the
then the lot's in
traditional
their
buy.
name, so you're not technically buying
That's
the
right.
lot.
That's right. The
You're
lot-
signing the lot to them, and then they're selling it to you. Now, the
They're
good
selling
thing
it
about
back to
that,
you.
for people with 5% down,
That's
that's
right.
exactly what they should be doing,
Yes.
because then they can get a default insured mortgage, because now the builders might be asking for a deposit of 30, 40, 50,000, and then the rest at completion. And that's totally different. That's no different than the big tract builders that are out there.
So the dream of building your own home can still happen with 5% down that way.
It could,
It
but only if you have a
could.
builder that's gonna carry it to the
That's
end.
right.
So they gotta carry the financial part of
Yes.
it. But if you get a builder that's saying, yeah, but you gotta give me money when I finish the foundation, you gotta
That's
give me
right.
money when you, well, then you can't buy with 5% down
So
because
find
you
a
won't have
builder
the
with
money.
deep pockets.
But again, the
But it
builder
is-
will make money on it because they're gonna put the cost of that financing in there,
That's
so.
right.
521 Talk 521-8255. We will be right back. Welcome back. Dora in for Paul, who's somewhere in the Virgin Islands right now, not knowing where he is.
On a boat. On a boat.
Frank is here. Let's go to the phone. Beautiful downtown Almont. Say hello to Rita. Hi, Rita.
Hi.
Good
Hi,
morning.
Rita.
Hello.
Hey,
We're ready. Go ahead.
Okay, my question is, make a really long story short, have a home equity line of credit that was established probably 10 years ago to with the sole purpose of purchasing some rental property for children. A couple of bad decisions later, houses were sold, and we're still carry a significant debt related to that, for which our accountant tells us it's okay because we can just keep claiming the interest.
yep.
Well, now we need those payments. Our the minimum has tripled in the last 6 months or so. So Dora thinks considering maybe we could step off having a mortgage on a home rather than holding on to carrying this credit. Any feelings on that?
I would say at this point, you've gone through the last 6 or 8 months. I mean, it's obviously gradually gone up prime rate, and you've seen the increase happen from last May until today. And unfortunately, you'll probably see another increase next week because Bank of Canada is expected to raise prime by a quarter point. But I think because you've already gone 6, 7, 8 months with this pain, I would maybe recommend that you sit tight for another 4, 5, 6 months, because now it feels like we're in the downward trend of interest rates. So now we're going to start to see at least fixed rates on mortgages go down. So in my opinion, I think if you converted it to a mortgage now, number one, your payments wouldn't be lower because a mortgage incorporates both principal and interest payments, where your line of credit's interest only. So the interest rate might be lower, but your payments will likely still be the same or maybe even higher. But I would say that at this point, why not, if you believe that a recession's forthcoming and the markets are pricing for a recession, and so is every single economist talking about a recession coming, which means that fixed interest rates are likely to come down, then why not at this point wait it out for a little bit longer and see how much those interest rates come down before you decide to convert it to a mortgage. That's what I would do. The only other option to that would be if you took a variable rate mortgage, because then you get a prime minus. So right now in your line of credit, you're likely prime plus a half, maybe prime plus 1, where you would go to prime minus. So at least you'd have the option.
You got to pay principal on that too.
Yeah, you got to pay
Yeah.
principal, so your payment's going to go up, but at least you'll have the option to kind of try and time the market where you can go into a fixed mortgage if fixed rates come down, like many are predicting to do. So it's tough. Now, again, you sound down, and you're right, the payments have gone up, but if you've had these investment properties, how many investment properties you end up buying?
2.
2. How much have those gone up in how long have you had these properties?
Oh, no, we don't have them anymore. We sold them.
Oh, okay, and you still have money on the line of credit? Did you sell them before COVID?
Oh, yes, yes.
Oh.
And, when interest rates were really low.
Yeah.
Yes.
But, yeah, no, we were the world's worst investors. We lost money on it. So, and, well, it's very complicated.
Right.
Bottom line is, yeah.
How much is the line of credit? What do you owe on it?
We're
Okay, so again, it's not, listen, it's a significant amount in mortgage terms. It's a small amount, but it's still a significant amount to people. Again, my recommendation would be if you can just hold on for another few months, I think you'll start to see that the interest rates come down on fixed rates. And if you want to convert it to a fixed mortgage, do it at that point. Which bank's the line of credit with?
CIBC, and I have not talked to them about it because I don't trust them to give me the right information.
Well, that's where, what I would suggest is if, keep listening to the show and, I'll talk about rates on a weekly basis and what's going on with rates. And by the way, like fixed rates should be coming down because the bond market has come down to the tune of 60 basis points in the last 2 weeks, but none of the banks have lowered their fixed rates. So they're all doing very, very well right now. And when I see, Peter from OSFI talking about he needs to protect the financial institutions, honestly, my stomach turns a little bit because hardworking Canadians are paying the price to make sure that these banks continue to have record profits. And here he is talking about protecting them and not doing what's best for Canadians. And that's upsetting to a lot of people, actually. So, but I would sit tight and maybe reach out to me. Again, go on the website, mortgagebrokersauto.com. Give me a call, and I'm more than happy to give you some advice. And if you're really struggling to make the payments, if you're struggling to make the payments, I don't think going to a fixed is going to help you.
Yeah.
Right.
I know it's upsetting, and we talk about variable rate mortgages, but nobody talks about the fact that the people that are really paying the price are the people that have home equity lines of credits, and to see their payments go up as significantly as they have over the last 8 months.
Thank you, Rita.
Thank you.
Thanks so much.
Take care.
Real estate, it's all about timing, isn't it?
It is. It's all about timing.
And bad luck sometimes. Like
Yep.
honestly, anybody that bought in 5 years from
That's
5
right.
years ago, anybody that bought 5 years ago, the average home was probably in the 4s.
That's lower.
And lower maybe,
Yeah.
and their mortgage coming up for renewal, and they're sickened by the fact that, oh my God, like my payment's going up $600 a month. I don't know that I can afford
But it's
that.
the timing on
with the
selling
rates
too, right? She had
It
to
is,
sell
it
before
is.
Yes.
before COVID.
Awful.
Had
Yeah.
she waited another year or two,
Awful.
I mean, hindsight is perfect. But
Same thing on the mortgages. If
That's right.
timing is bad luck. I mean, if that mortgage would have come due last year at this time last year, you were getting a 5-year fix in the 3s.
Yeah.
Where now your mortgage coming up for renewal and your bank is calling you, offering you the 5s and the 6s. If the mortgage doesn't come due until maybe a year from now, we might be back into the 3s a year from now. So it's just bad luck. But the problem is that the solution for the short term is not any better because we're in inverted bond yields right now, which means that the 1 and the 2 year rates are higher than the 3, 4, and 5 year rates. So taking a 1 or 2 year doesn't seem to make a lot of sense either. And the banks will talk you out of it because they know that then a year from now they got to fight to keep you again and they want to retain you. They'd rather you take a 3, 4, 5 year, so at least they got you for a longer
Yeah, but they're
period.
getting a pretty good chunk of that 1 year right
Yes,
now.
they are. A very good chunk. They're getting a very good chunk of the 3, 4, and 5 year as well. That's why you see the 3 year at 4.99 because the spread on it is huge.
Yeah.
It'll be interesting to see how quickly the rates come down and what kind of effect that has on the market because the inventory remains low. So will things go crazy again? What will happen? And so it's a very, very interesting time.
The labor market is what's throwing this all off.
It's
the
so
labor
strong.
market is so strong,
It's
and
so strong.
they just came out with a stat: the lowest unemployment, the least amount of Canadians filed for unemployment last
In
month
what, 22 years or
of
something?
ever since they started keeping statistics on it. So the labor market is going against everything else that our eyes tell us. When you go to a restaurant and the restaurant owner is saying, I'm really starting to feel it, like people aren't coming out to eat anymore. And you talk to consumers and they're saying, we can't afford to go to a restaurant. We have to give that up. We have to give up, our gym membership. We're just going to do it at home. So all these are small business owners that are going to really continue to start to struggle even more, like they haven't been enough through COVID. Now, just as they get their
That's right.
things going again, now they're going to go backwards again. And then you've got, but aside from that, and that's why I see this labor thing, and aside from that, I can tell you financial institutions have started to lay off all over the place. We're reading that Microsoft just laid off
10,000 people.
10,000 people.
That's right.
Amazon laid off.
Yeah.
Amazon, who was the fastest
Yes.
growing over the last
Yeah.
3 years, have laid off all these people. And yet statistics come out and they say that there's less people. So are these people just retired? Have they quit? Like I'm trying to figure out what's happening that people are losing their jobs, yet there's no EI claims.
There aren't any
EI claims. And it's happening all over the world. It's not just us. I mean, this is a worldwide phenomenon that's going on right now.
Yeah, certainly discretionary spending is decreasing. You can see it,
100%.
you can feel it. But yeah, the job numbers are really skewing everything. So it's a different time. I mean, I think historically you could look at markets, you could look at interest rates, you could sort of predict what was going to happen. And I think the next 12 to 18 months, much like 2020 to 2022 were unprecedented times, right now it's the same thing. It's just we're not really sure what's going to happen.
But you're seeing the market begin to wake up, right?
Certainly, absolutely, the market is waking up, and I think it's time for sort of a collaborative mindset between buyers and sellers, where don't be too emotional as a purchaser, as a buyer. Don't think you're going to get something well below asking market value, and as a seller, don't think you're going to get the home run that you did a year and a half ago. And so there is activity in the market. Ottawa has always been a very stable market. We're a very robust market. Our unemployment rate is one of the lowest in the country, and so there is activity.
Will the next 2 months be more favorable to buyers or sellers?
Well, days on market is hovering at about 36. I would say for the first time in a long time, buyers are going to feel like they have a little bit of an advantage. There is going to be time for them. But if last week...
But they need the listings too, right?
That's right, they need the listings. And if last week was an indication of what's to come, we did see, multiple homes sell in multiple offer. And so if the inventory remains low, it may flip again to the seller's advantage. It's such an interesting time because week to week things are changing just so much.
Just let there be home inspections. Just the only thing I ask for. I mean, the financing I'm hit and miss on. It all depends on what they pay for it. All I ask for is I hope
100%.
the buyers have an opportunity to put a home inspection in there.
100%.
Because I want them to protect it. Like there's so many of them that have regretted their decisions to buy without a home inspection, and then they find faulty stuff. I mean, that put all the power in the seller's hands.
Yes.
And any seller that had a property that had defaults to it was able to put it on the market during that time frame, get rid of it without any.
Yeah, you can buy a house
Plus-
quick, but
Yeah.
the regret lasts forever.
Well,
Yeah, 100%.
I mean, in different markets in Ontario, it's very, very common to have pre-inspections. So when you go to list a property, there's an inspection report from an accredited inspector, and it's on file. And as a purchaser, as a buyer, you can choose to look at it, you can choose to have your own, but there is something there. So it's a level playing field for all buyers, and you know what you're getting into. Our markets doesn't seem to have taken that on.
Would you recommend that to your sellers?
Well, I would, because I single-handedly would like to change the industry. So, so I'm going to put on my cape. I'm going to put on my cape and move ahead. But I think it's a good idea for everybody, because as a seller, if there are things that you have to, if you have any pride in your home, you're going to want to do those little repairs or know what you're up against. And as a buyer, it
gives you a little bit of peace of mind,
It
right?
does
And if it
give you-
does go to multiple offers, you've got that addition over the next door neighbor who's selling to say, look, there's nothing major going to happen here.
That's right. That's right. No, it's peace of mind, and I think it's the right thing to do. We're experts in selling real estate, in trading, in pricing, in marketing, and there are experts in construction and experts in everything else. And just like you're going to go to a mortgage broker for finance advice, you're going to purchase a home with a real estate professional. There should be a building inspection.
521-TALK, 521-8255. We will be right back.